Good morning. Happy Friday. Man, it has been a busy year this week. Seriously, look how much stuff happened this week. It was crazy busy. Not only have the election and the Fed meetings, you had all sorts of news, important news hit, all sorts of great reports, volatility in the markets, unbelievable, lack of sleep, crazy busy. Everybody's just trying to figure out the way. What's the way forward? What's the way, we can just, all win? And today I was going to try to pick a light topic, but I just couldn't help myself. I was compelled to talk about this dang FICO score price increase. And so I know everybody's heard that FICO is raising their price from $3.50 to $4.95 per score. So on a three score tri merge, that's $15 now. The real problem is, and the question is, who's the villain and why is FICO doing this? Well, FICO is a private company, and other than that, they're a monopoly. The question is, are they a government created and protected monopoly, or are they a monopoly because they created, technology, proprietary technology, or because they're the most efficient at delivering, data? And private companies have the right to make a profit. In this case, $5 per credit score. What they argue is, look, in a mortgage transaction, we probably provide the most important data of the transaction, and we provide it as the cheapest provider. To get our FICO intelligence and data, it costs $15 next year. What else? It's probably far more important than anything else in a mortgage file. And what else do you pay for $15? That's their argument. And then further, they argue, by the way, currently lenders pay $80 for a tri-merge credit report. We only, the actual FICO data is less than 15% of the cost you're paying for the credit report. And as a matter of fact, if the closing costs on a loan are $6,000, then the $15 we're charging is less than 0.2% to the total transaction. And yet everybody's making us, being FICO, the boogeyman. When we are providing the most valuable information, critical data, complicated data in a very usable format, and that is well worth what we charge, and we should, it's fair that we charge it. So I don't know, are they the villain? Now, to me, and I may be prejudiced, and I apologize about this, but to me, the villain in the whole credit game has always been the bureaus and the aggregators or the tri-merge resellers, right? They're the ones on an $80 credit report today, they're adding $65, right? I mean, that's who's doing it. It's the bureaus adding it, and who's really adding it is the resellers. Wherever you go and get your credit, factual data, or whoever it is, why it does. I don't know off the top of my head, but they account for over half of the total fee. That seems kind of crazy, doesn't it? It seems kind of crazy. And so FICO's raised their score. Now, what they said, and this isn't probably true, they said, look, we've only raised our price 3 times in 30 years. I don't know if they're keeping score right with that. Because in 2018, they raised their price of the FICO score, and it went from 50 cents to 60 cents in 2018. 60 cents a score. Now it's going to be $5. But then in 2023, they switched to a tier-based structure, which we all hated, where their top 10 clients got credit scores for 60 cents. And their worst clients got credit scores for 275. And so if you were a small company, you were at a great disadvantage after you had all the stacked fees on that credit report, right? And so after a huge uproar, they switched that to just going to flat fees where everybody paid $3.50, right? So that's 3 changes right there. And then this will be a 4th change. This is a 41% year over year increase. But that's a change in 2018, 2023, 2024, and now 2025, right? 41% increase. And by the way, batting the hatchet, they're going to raise fees again next year. It's really funny. The stock analysts have been talking about these fees increases, on if you get any of like your financial planner or newsletters, they've been talking about these increases for months because they've discussed buying the stock. And that's one way you can always win. If you think a company is just making ridiculous profit, unfair profit, buy their stock. Don't fight them, just join them. But there's going to be another increase somewhere between $1.50 and $2 next year. It's going to continue, right? But in this article, and by the way, I'm quoting information. I'm so sorry I didn't mention this. Housing Wire on the 6th had an article. It's official. FICO raises score price to 495. It was written by Flavia Furlan Nunes and James Kleiman. It's a really, really good article, and I know there's tons of articles, and you've heard this. This is a really good article. I put a link to it in my notes below. I also did a LinkedIn post yesterday, kind of highlighting the summary of the article, and did a link there. So either way you want to digest it, you have access to it. Sometimes Housing Wire, depending on how many articles you pulled, might be behind paywall, so it might behoove you to go to my LinkedIn and check out my summary of the article. But they did a really good job on this. But in the article, the thing that caught my attention and really kind of maybe didn't get my ire, but really frustrated me. So if FICO raises their FICO score by $1, the bureaus and the aggregators increase it $6, or they multiply it by mark it up by 500 or 600%. So this $1.50 increase is most likely going to cost $7.50 or $8. And if you got $8 times 3, now you're at $24. And if you started with an $80 credit report, now your credit report's $104. It's not insignificant, right? And so in the article, it's so interesting. Like I said, it really caught my attention that and I'm just going to read this. I'm going to read this sentence to you because you're going to get fired up too. Mortgage industry executives, this is from the article, quote, mortgage industry executives told Housing Wire they expect the credit reporting bureaus and aggregators to pass on the FICO cost increases and pad their own fees on top of it. Here's the part that will chapter hide. Because, now I'm going to quote again, those companies are threatened by revenue from trigger leads to drying up with new legislation. Now, to me, they just won the villain award. First, they're villain for selling this information and creating these trigger leads. We all hate trigger leads. That is, unless you specialize in them. If you do, God bless you, because you're a great salesperson. But trigger leads are just a scourge on society. But more than likely, the government's going to make trigger leads illegal. We know that's already been passed, right? And so these aggregators are freaking out because it's such a huge source of income for them. So they have to replace the income. And they're going to replace the income by jacking up these new FICO score fees. Yeah, see, they just won the villain status in my mind. I mean, okay, we were doing a horrible service to humanity by selling trigger leads. Now that that's illegal and probably immoral, we are now going to overcharge our other clients so that we can replace those fees. All right, call me not a fan. All right, well, I apologize about having that strong opinion. And by the way, not to mention, going back to FICO, we've only had 3 raises. Well, how about when you went from changing your fees on soft pulls? You told us forever to do soft pulls. They're a fraction of the cost, and you said, "Oh my gosh, everybody's doing soft pulls, so we're not doing the hard pulls, so we're going to charge you more for soft pulls." Crazy, isn't it? Crazy. So most likely, credit reports are going to go up $20 next year, and then the following year they're going to do the same thing. So it's just one more thing to face. And and what's the result of this? The result is more and more companies have to charge their borrowers for the credit reports up front. I don't know what percentage of companies do that now, but if you went 2 years ago, it was a minimal, maybe 10%. Oftentimes brokers do it because they have to pay for it out of their pocket, and they don't. Loan officers don't want to pay for the credit reports. They don't mind if their company pays for their credit report, but they don't want to pay for it. So brokers were charging. But as it becomes a bigger drag on expense lines, and as margins narrow, and as conversion rates drop, where we're having to pull 10 or 15 credit reports to get one closed loans, that $100 fee is expensive. So more and more companies are having to charge the borrower the credit fees up front, and that of course causes friction with the borrower. Right? Not only does it cause friction, but now you have to have additional administrative support, more compliance support. I wish we didn't have to do it. Nobody likes doing it, but that's the state of affairs. What we have to do is just be a clear light on how to help clients, achieve the dream of home ownership, how to do it as least expensive as possible, how to structure the loan as positively as possible, how to just reinforce the benefits of home ownership, the wealth creation, and get past these small little nuisances. So stew over it for a little bit, then let it go and go back to serving people and help them get homes. That's my message today. Thanks for letting me vent. I'm like you. This stuff frustrates me. But It's okay. It's all good. It won't affect us putting people in houses. So there you go. I hope you found the information helpful. You can click on this article, like I said, my link below, or go to my LinkedIn and get a summary. I put a little editorials, comments in there. I apologize. And have a great Friday. It's been quite a week. Man, keep your head down and keep helping people. Thanks. Talk to you soon. Bye.